In its first earnings report since the real estate company shut down the Zillow Offers division, Zillow reported losing $881 million on its algorithmic-driven home flipping business last year. The algorithm examined tens of thousands of flips that can lead to consumers buying all kinds of situations while falsely assuming they are getting a great bargain. The idea of Zillow Offers has been met with skepticism in the investing world from the beginning. Due to the low profit margins and capital-intensive nature of the industry, it has always been regarded as less desirable than Zillow's primary business. Because house flipping is primarily human and situational, several people thought the idea would fail right away. What's good, you guys? This is Market Thrive, and today we're going to talk about the tech real estate marketplace company Zillow and how it dug itself a deep hole with its house flipping disaster. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. The business as a whole, which includes Zillow's profitable home listing and advertising divisions, had a net loss of $528 million in 2021. This was mostly because of Zillow Offers, which helps people flip houses. The majority of Zillow's revenue in recent years, but none of its profits, has come from the flipping business. In November 2021, the company surprised the market by saying it was shutting down Zillow Offers because the tech-driven platform couldn't reliably forecast changes in home prices. Also, Zillow cut around 2,000 jobs, which is about a quarter of its staff, and lost more than $500 million on the value of the remaining properties connected to Zillow Offers. Zillow reported a net loss of $261 million, or $1.03 per share, for the fourth quarter. Analysts told FactSet that they thought Zillow would lose 90 cents per share. So where did Zillow go wrong? The online real estate marketplace is run by Zillow as its primary offering. On their platform, they made money by selling products and providing expert services to real estate brokers. However, there was a very evident cap on the entire addressable market for these products in the residential real estate industry. Maintaining a marketplace website that customers use just a few times a year at most can only hope to bring in so much money. So in 2018, they unveiled a brand new, radically unconventional business concept for a business of their size: professional house flipping on a large scale. The CEO of Zillow praised their new house slide business as a significant stride for the company during their 2018 annual press conference. A year later, their long-term debt increased once more, reaching $1.50 billion. Their current liabilities, which mostly consisted of short-term debt, had risen substantially every quarter until the end of 2019 and exceeded $900 million. Unfortunately, this turned out to be a losing endeavor. The main goal of this was to assist them in paying for the houses they intended to flip. In the past, flipping houses was a low-volume business that anyone could do to make tens of thousands or occasionally even hundreds of thousands of dollars in profits. It requires a detailed understanding of plumbing, electricity, interior design, and occasionally even building for it to be successful. Even if everything is done perfectly, a market downturn might render flips unprofitable. For this reason, it is also crucial to closely monitor the local market dynamics of the real estate markets where the flips are being done. It's crucial to keep in mind that effective house flipping requires incredibly accurate models to determine a home's value and what it would be worth after some degree of repair on a scale as large as Zillow. The problem is that a computer would have a hard time evaluating it. A machine learning system cannot effectively employ the detailed knowledge of the aspects that influence a home's pricing, such as, for example, whether the floor layout makes sense. A house may appear to be undervalued to an algorithm based on elements like total square footage, the number of bedrooms and baths, comparable transactions, etc. The house stands on a septic system, so in that case, getting rid of it would have cost tens of thousands of dollars. For instance, it might help to clarify why the house's value isn't what it seems to be on paper. A human buyer would talk with the seller's representative about their options and take each situation into account separately before making a choice. In an effort to withdraw from its catastrophic house flipping operation, Zillow is now holding onto 7,000 homes that it is attempting to sell on residential marketplaces around the country in an effort to raise cash. According to Zillow, it had contracts to sell more than 85% of the houses it still had on hand from its shuttered home flipping operation. Before interest costs, Zillow lost an average of almost $25,000 on each home it sold in the fourth quarter. This was true even though it sold the homes much faster and at much lower losses than it had expected. It has already sold some of its residences to significant investors, such as the landlord Pretium Partners, who has a November agreement to purchase 2,000 of them. After Pretium bought Zillow's houses, the iBuying business started to be taken apart. Pretium, which owns over 70,000 single-family houses, intend to keep the properties and keep renting them out. For the company and others that specialize in renting properties close to popular metro regions where families frequently feel priced out of the for-sale market, the business has been successful. Demand for rental housing was also boosted by a sudden rise in the formation of new households, which had been put off during the pandemic. Quote, "We continue to invest in communities and improve access to housing throughout the U.S., end quote, a spokesman for Pretium said. People with knowledge of the matter say American Homes for Rent and Invitation Homes Incorporated, two more significant investors in rental homes, are reportedly considering putting offers on some of Zillow's remaining real estate holdings. Zillow asserted that at the end of the third quarter, in addition to the residences it still needed to sell, 8,200 more homes were under contract for purchase. Zillow says that it will likely be a few quarters before its home flipping business is completely shut down. Sherrod Brown, a senator from Ohio and the head of the banking committee, is one of the 3 Democratic senators who have voiced alarm about how real estate speculators are lowering the number of homes available to average homeowners. Senators wrote to Zillow CEO Rich Barden on Monday to inquire about the company's plans to sell properties to investors like Pretium. In their letter, the senators said that Pretium's track record was disturbing because tenants had complained about the way they were billed and the properties were in bad shape. But with Zillow's options so limited, unfortunately, they have been backed into a corner and I don't really see what else they can do. Despite the fact that the stock has fallen dramatically since the revelation, Zillow's core business is still strong and really outstanding. Zillow may not be growing quickly in some areas, but the company is not in imminent danger of failing. If the stock price drops a lot, investors may decide that it is worth it to look at the stock based on how well it does other things besides flipping houses. The real estate business had some success as a result of its ability to take advantage of the booming housing market. In 2021, Zillow's core business, which is centered around house listings on its website, saw a 30% increase in revenue over the previous year. In a letter to shareholder, Zillow stated that it aims to achieve $5 billion in revenue by 2025. The corporation claimed to have made $8.1 billion in sales last year, of which $6 billion came from Zillow Offers. Rich Barden, the chief executive, stated in an interview that the company will increase income by extending the use of its financial services and promoting the use of Zillow for home tours. Customers are 3 times more likely to purchase a home from us after taking a tour, according to Mr. Barden. Zillow tried to be innovative in the online marketplace, but unfortunately ended up failing miserably. So do you guys think Zillow will recover from their house flipping mistakes? Will their core business be able to get the company in good standing with the shareholders? Feel free to jot down your thoughts in the comments section below. If you enjoyed today's video, please leave a like. And if you want to stay updated in our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.